then the speed of decline in New Zealand interest rates over 2024 is going to be slowed down. But if China falls over, things get a lot worse across there, then we have extra downward pressure on New Zealand interest rates over 2024. Hello again everybody, and welcome to another one of my weekly videos with NZHL. This week I just wanted to quickly cover three particular things out there. First of all, there's a monthly survey which I run with Crocker's Property Management, having a look at what existing investors in residential property are seeing, what they're thinking about doing. And what I've been finding over the past few months is evidence that it's getting easier and easier to get a good tenant. In fact, in my most recent survey, I've had a net 22% of the investors say it is now easy to get a good tenant. Last month, that was a net 17%. And if you go back to the end of last year, there was in fact a net 8% of investors saying, oh, it's hard to get a good tenant. So the rental market on average throughout New Zealand, but especially up in Auckland, is turning increasingly in favour of the property owners, of the landlords. And I think a key cause of this change is the surge in population growth. We had Stats New Zealand the other day just announced that in June of this year, the population was 2.1% greater than a year earlier. And that's because of a net migration gain of about 87,000 people over the past year. And most migrants, when they come into New Zealand, they go into Auckland. So that is where we're seeing this extra pressure upward on rents. And that's going to be one of the factors which will contribute to Auckland continuing to lead the housing cycle upward this time. We can look at the REINZ data and already see Auckland is out in the front there, which brings me to the second thing I want to discuss, and that is what's happening in China at the moment. Their economy is slowing down quite a bit. Virtually all of the monthly economic indicators are looking bad. Some of them are looking so bad the authorities are no longer going to publish them. 32% of New Zealand's export receipts come from China, so what happens over there matters back here, and especially when you're looking at things like the forestry sector, red meat sector, and of course dairying, where prices are falling in all of these areas, demand for volume going down. We've just seen Fonterra cut their predicted payout for this season for the second time. And of course, what this means is that out in the primary sector in New Zealand, there are some tough times ahead because of these low returns coming at a time when their costs have gone through the roof and there's more to come along, meeting emissions, requirements, etc. And so spending in the rural community is going to be pretty weak over the next 12, maybe 18 months or so. And that weakness will lead some people to shift from the regions into the cities. So point one, it reinforces some of that upward move in the cities, especially Auckland, Wellington and Christchurch would be relevant there. But of course, there are these risks associated with China's property sector, and if we get greater downturn over there, greater concerns about the indebtedness in that sector, I don't know if that it'll lead to a new global financial crisis or anything like that, but it is a new risk on the table, and that opens up a scenario for interest rates falling more quickly than anybody is thinking here in New Zealand and overseas through 2024 if China really does slow down quite a bit. Now, that's certainly not something I think necessarily to back that view at the moment, especially because of the third point I want to mention, and that is in the United States, their economy, well, it's actually looking okay. And expectations there in the market that the Reserve Bank or the Federal Reserve in the United States would be cutting interest rates over 2024, that's been pulled back. There's no real change in expectations for any further tightening in the near future, but optimism about rates falling in 2024 is easing. So if China goes okay, then the speed of decline in New Zealand interest rates over 2024 is going to be slowed down. But if China falls over, things get a lot worse across there, then we have extra downward pressure on New Zealand interest rates over 2024. It's hard to know which view to take at the moment, and that is why for most borrowers you really need to recognise that we still live through one of the most uncertain periods you have ever seen in your lives, and certainly for my experience as an economist back in New Zealand since 1987. And that's why maybe taking a range of fixed interest rates, if you've got your mortgage coming up for renewal, maybe some at 12 months, maybe some at 18 months is quite popular, maybe some at 24 months. I know some people are still looking at 3 years. Personally, I think that's a little bit long. It's the wrong point in the cycle to be locking in there, but having a bit of a mix and match there is, I think, a very good idea given the huge uncertainty out there and the fact it's really going to be quite a long period of time before we can formulate a view on really what interest rates are going to do in 2024. December 2024 is when we'll probably have that view, given the uncertainties which exist these days. All the best out there.